Kumpulan FIMA started in the canning of pineapples, but today it is a diversified group with 4 business segments. They have also expanded beyond Malaysia to Indonesia and Papua New Guinea. The group comprises of 2 listed entities. The group's revenue had grown over the past 12 years. The bulk of the revenue growth came over the past 2 years from the plantation and bulking segment. Profit after tax and gross profitability also showed a declining trend. This was due to the loss of a major government contract, as well as lower gross margins and high SG&A expenses. Regionally, the Indonesian operations focus on palm oil plantations, while Papua New Guinea main operation is fish canning. The Malaysian operations cover the 4 business segments. Not all the 4 segments were pulling their own weight. The manufacturing segment delivered the best return. The plantation business, on the other hand, achieved the worst return, even though it used the largest capital. Compared to other Bursa companies with a similar size of plantation land, Kumpulan FIMA performance was average based on the revenue growth and the average return on equity. I would rate the group as financially sound. It has lots of cash with a low debt-to-equity ratio. It generated positive cash flows from operations annually with a good cash conversion ratio. It also has a good capital allocation plan with low reinvestment rate. There are 2 key risks for the group. The manufacturing sector is very dependent on the government contract. Secondly, there is a land title dispute in Indonesia. The court case over this is still pending, and the group incurred some impairment losses. Pending the court decision, the Indonesian government allowed the company to continue operating on the land. A valuation of Kumpulan FIMA showed that there is more than a 30% margin of safety given the market price of $1.82 per share. While the group did not show any revenue growth over the past 12 years, this was because the revenue growth from other segments offset the loss of a major government contract in the manufacturing segment. Overall, the group is fundamentally sound based on the metrics summarized here. There's also a sufficient margin of safety. I see this as an investment opportunity. If you want to know more, read the article. Thank you.